Hello everybody and welcome back to another video. Today is going to be a daily review and we're going to focus on dollar today. There was some really great price action on dollar, and my last video was on dealing ranges, and today and yesterday even was beautiful example after example on dollar of how we can utilize the dealing ranges to understand what should be delivered to, what shouldn't, how we can internalize order flow. So we're going to start off with the daily chart, and you can see we have these relative equal lows with this untouched fair value gap below it. You can also see that today we did in fact deliver to those, but we have been watching these targets in Discord for some time now. If you look a little further up before this was delivered to, what occurred? We had this fair value gap here, but we closed below it. So what does that make it? It's an inversion. So we want to see this act as support. Do we wick above it? Yes, but that's permissible. The bodies tell the story. Where was this wick going? Right above consequent encroachment there, of that wick there. And then we tap into it, displace lower, and begin to sell off towards these relative equal lows and this inefficiency. But we're going to backtrack and go to the lower time frames and see how we made our way down there today and yesterday. Okay, so we're down on the 4-hour chart now, and I kind of just want to talk about the order flow and understanding what was occurring here in this price fractal. So we have these relative equal highs and we have these relative equal lows. So this would be the dealing range low and the dealing range high that we're working in, because we sweep this buy side and we sweep this sell side here, but we also swept some sell side to the left of this chart, not shown in this slide. But this would be the dealing range low for the 4-hour time frame. And after we made these lows here, you can see we came all the way back up to a premium, right, between these relative equal highs, the dealing range high, and the relative equal lows, the dealing range low. We fell just short of this inefficiency, the highest white box here. Okay, so we have liquidity and inefficiency here. It would have been nice to see that tapped into, but the fact that we left it, I wanted to see this white box here, this SIBI, as kind of the last line of defense going into the week, right? Why? Because after we came up here and we left this swing high just short of this inefficiency and displaced away, yes, we completed an objective by getting back to a premium above equilibrium of this 4-hour dealing range. But since we closed below this BISI here, it becomes an inversion, right? The orange box. So what signatures do we want to see with an inversion? Best case scenario, we don't want to see it completely get filled in. And you can obviously see here, right next to it, right on top of it, we have this overlapping SIBI on top of this inversion. So we, best case scenario, again, we don't want to see that get filled in, the white box here. Why? Because this should be balanced. We've had buy side delivery through this gap, then we've had sell side delivery. More importantly, what's the bias? Sell side. We're bearish. We want to target this daily sell side liquidity, those relative equal lows, and the fair value gap below it from the previous slide. Okay, you can obviously see here again, we did in fact get that daily sell side target and the fair value gap, but this is kind of how I would read price action, internalize this order flow. If I'm looking for a price to deliver to a sell side target, I want confirmation from these PD arrays, right, and these signatures that we are in fact still respecting premium PD arrays and disrespecting discount PD arrays. So this BISI, if we were bullish and to find support here, we should have done it inside of this BISI. We did not. We closed below, wicked back into it, failed to get to the high, and failed to get consequent encroachment of this SIBI and sold off to our targets. So down to a 1-hour time frame, we can start to refine a dealing range and really understand what we want to see in price if we're targeting those daily relative equal lows. So we have buy side swept here. So this is our dealing range high, and we have sell side swept here. So this is our dealing range low. So we want to know equilibrium of that range to gauge if we were to have any retracements back up to buy side into a premium of this dealing range, where could we reach for and what would we want to see offer resistance to price and push price back down to sell side. So we retrace back up above this purple line, which is equilibrium of this hourly dealing range. We retrace back to a premium to some random area. No, we get to look, this orange box, that's another inversion on the hourly. Just like the 4-hour, this SIBI is overlapping this inversion. So it's already had what? Buy side delivery and sell side delivery. Have we met our sell side objective from the higher time frames, those daily relative equal lows? No. So this is exactly what we want to see. This is just institutional order flow entry drill. So this is London high here. So I'm a New York session trader. When I get to the charts in the morning, I want to see what occurred during London session. So when I see this occurring from London session, that helps me make my plan for the New York session. We didn't even get to CE of this inversion. Best case, that's great for shorts. We also just wicked a tick or two into that SIBI for the institutional order flow entry drill. So this is exactly what we want to see. So now we can see what occurred with this hourly chart. Obviously, we got down to our daily sell side objective. What do we see here occurring in this price action? Well, we've already had the institutional order flow entry drill. So in terms of a daily bias, best case for shorts entering the session, I'm thinking I don't want to see this high violated in terms of how quick we could get down to the daily sell side objective. Okay, that doesn't mean that if we violate this high, we're just going to rip, right? We could still take out the high, but it might take a little longer for us to get down there. But since this is already balanced and we've already had the institutional order flow entry drill, I want to see that remain untouched. Looking at this lower orange box, this is another inversion. Remember, we're bearish, higher time frame. This is what we want to see. We have buy side delivery, then sell side delivery. Do we wick above it? Yes, but where are we going? Mean threshold of this order block and equilibrium of the dealing range. That's permissible. And now, after we tap into equilibrium and mean threshold of this bearish order block and close below this BISI, making it inversion, if we expect sell side delivery to this daily objective, what's along the way? This dealing range low. Looking at this price leg, are there any inefficiencies here? No. So we want to see price just zoom down there, right? We expect speedy delivery after putting all of these pieces of the puzzle together. So I do want to rewind it a bit again back to before this daily sell side objective was met. So we're now on a 15-minute chart, and we can see how we can refine this dealing range. So on top of all the things we just discussed from the hourly chart, what are we seeing on the 15-minute chart? We sweep sell side here, we sweep buy side here. So this is the 15-minute dealing range, and we have yet to meet our sell side objective. What do? We come back down to a discount of this dealing range, and we sweep some of this internal sell side. These highs were way too clean to be left, in my opinion. They could have left it, yes, but when you see something as clean as this, you have to allow, say you're in a short, say this was even S&P or something, whatever you trade. If I'm in a short, I have to allow my stop loss to be above that, just in case we do go up and get that, because these are way too clean. We sweep internal sell side, and then we go back and we're going to sweep this internal buy side above equilibrium of this 15-minute range. Now, if we are assuming and allowing price to get back above equilibrium to take out these relative equal highs, what's the premium PD array above that? That could act as resistance. There's no inefficiency up here. We have this bearish propulsion block. So we would want to monitor what? Opening price, mean threshold. How does price act in here if or when we take out these highs into this propulsion block? And of course, as we've discussed already, you can see how we did get this daily sell side objective. We went back up to a premium of this dealing range into this propulsion block, swept this internal buy side, those clean relative equal highs right here, and then sold off. Were there any inefficiencies in here? No. So price is going to want to target what? Since we're bearish, higher time frame, and we have this higher time frame objective from the daily chart right below it, we're going to want to target at least the dealing range low. And before we end it, I do want to take a quick look at this 5-minute chart on dollar. As we've seen in the previous slides, we did get those relative equal lows from the daily, but what would be the second target if we were to be overzealous to sell side for a continuation play? It was that daily fair value gap from the beginning of this video. So I'm down to the 5-minute chart, trying to refine this dealing range, see what's going on down here. We make this swing low and expand above what? We have this high, so buy side is purged, but I want to make sure in terms of semantics, I guess. There's a lot of people that are confused with market structure shifts and liquidity grabs. After this occurs, I just want to monitor this order block just to make sure that it's just a liquidity grab, because you can see here, this red rectangle, that's just a SIBI. We have a buy side purge. You can see we did reach the high of it beautifully, I might add, but the bodies respected the SIBI as resistance. If we price down to this order block and we start to see signs of support, I think we're going to at least go up to this high here in a premium of this 5-minute dealing range and maybe this SIBI up here. But best case for shorts, this is a breakaway gap and remains opened until we get this daily fair value gap. If it doesn't offer support, what does it become? A bearish breaker. And just to close it off, you can see that we did in fact smash through this bullish order block on the 5-minute chart, 2-hour daily objective, this daily fair value gap. So thank you everyone for watching. I hope you all learned something from this video, learned something about dealing ranges and how powerful they can be in terms of just understanding order flow, where we are in a range, what we want to see be respected, disrespected, on top of our higher time frame bias. So as you can see here, make sure you guys are following me on Twitter, Real Trader Tim, and the Discord link and one-on-one coaching, which I opened up some more spots for, is linked in the description. And all that good stuff, make sure you like, subscribe, yada, yada, yada. But I'll be back with another video soon. I'm working on some very, very interesting videos, I'll say, in my opinion, and I'm excited to share them. So I wish you all safe trading the rest of the week, and I will talk to everyone soon.